Hey everyone, today we are going to do live expiry trading in Nifty. We had carried a 22,500 short straddle and we had hedged it with 100 points away. So currently the market has come down and we are at a loss of 0.2%. So almost around 10k is our loss. This is what we have started at. The worst case loss what we can go today is somewhere around 18,000 which is 0.35%. So assuming that I hold this trade as it is, do not touch it and the market just ends up coming down. So the time is around 9:50. If you take a look at the positions, so you can see that we had carried a 22,500 short straddle with 100 points away hedge. So my expectation was we might not see a big gap up or a gap down, but market opened almost 130 points higher and now it has come down completely. So the first beginning 10-15 minutes volatility itself is quite high, and as you can see the premiums haven't really decayed. So even though the market is trading somewhere around 22,500, we haven't seen much decay in the premiums. So since the hedges are just 100 points away, I think the maximum loss should be limited to 15-20,000, and I will try to make sure that the overall loss for today doesn't exceed 1%. So the first hour definitely doesn't look that good. So the volatility is insane. Let's see if it can cool down in the later half. Okay, currently there is a steep fall in the market. Market is about to break 22,400. And not just that, you can see that there's a huge imbalance in my call leg and the put leg. And call leg is trading around 20-25. So what I can definitely do here is try to collect some additional credit on the call side, right? So we'll short some extra call option. Currently we have 700. I'll be adding 700 more call option. So you can see how the things are actually changing. So after I shorted the additional call leg, my downside loss is now getting limited. Whereas if the market comes back up, so then I'm going to get hurt. So due to which I have also placed a stop loss around 38.40. So why I have kept the stop loss is if there's a sudden move. So generally what happens is if the market comes back gradually, you will have time to adjust. But in case if there's a sudden move where market just bounces off, so then market gives you no opportunity to adjust and you have to take a hit. So that's the reason I will just end up keeping a stop loss for safety. So this is the current trade as of now, where we have a 22,500 short straddle with extra call short and we have a completely hedged position. So as you can see, the market is further cracking down and the fall is just insane, right? So in spite of that, you can see we have done a fairly good job of holding our M to M, right? So we are just down by almost around 0.22%, so around 11k or 12k. We have done a good job of holding our M to M even in such a fall. So the thing here to note is, so in the beginning itself, I had a loss of almost around 7,000 rupees, right? So post that we have hardly lost 0.1%. Because market has fallen so much, currently it is at almost around 22,350, right? So maybe we can also bring down our call leg. So from 22,400, let's try pushing it to maybe if not the full quantity, at least part quantity to 22,450 call option. Okay, this turns out to be a little aggressive step. So if things go well, it is good. If not, so then this would be definitely a reason to regret. So the additional credit what we are collecting is hardly around 7 to 8 points. So the risk what we'll be taking is much higher since the market currently is looking bearish. So we can take this, and as and when we start to see that the market is taking support and trying to bounce, we can come off the entire position. Okay, so now the volatility is actually insane. So the market is trying to come back towards 22,400, 420. So obviously one thing you can see is what we did was a blunder, right? So I was just watching or looking at the level of 22,380, 390 to cut my entire position. But the move was so sudden that I had no opportunity to cut. So it just went and hit my stop loss before. So this was a big blunder, I would say. And you can see that it costed us a straight 0.2%. So we have now come all the way from 12k where we were trading around to almost around 25k, and we are down by 0.5%. So maybe if I had continued to hold 22,500, so we would have been in a much better position. So as of now, this is the position and this is the trade what we are holding. Let's see how we can continue from here. To be honest, I'm actually kind of expecting an up move towards 22,450 because 500 there's a lot of open interest, right, on the call side. So not sure if that will be taken out, but maybe we might come back towards 22,450 because on the lower side also there is some good support seen. Okay, now the market is actually becoming quite choppy. So it has come back towards 22,470. And one more thing, what you can see here is as and when the market surged, our call side stop loss hit, right? And it is not so the case where we are getting some linear decay. The decay in the market is hardly seen because of the volatility, and since the market ended up coming back, right? So we lost straight away another 0.2%, and currently we are almost around 0.8% down. So we are having a M2M of negative 3840K. From here on, since I don't have a lot of risk which can be taken, I have to start playing little careful. So currently I have created a 22,450 short straddle and I have hedged it with just 50 points away. So the best part about this thing is, in case if it is ending at 22,450, right? So my reward would be almost around 50 to 60K. And if in case if the market is going to go beyond that, then I might further end up losing around 15K, which will leave me with, let's say, around 1% or 1.1% negative. So this is a completely risk defined trade. So there is no additional risk I'm going to take beyond this. So let me leave the trade. Let's see in case if we can get to any favorable position by end of the day. So as you can see, the market has now completely taken out 22,500. So honestly, this is something which I didn't expect. So even though I had a 22,500 short straddle from yesterday, so you can see that the adjustment has hurted us quite a lot. One thing what you can see from the morning, we are not really in sync with the markets, right? So the very first adjustment was actually good, but what we did post that of maybe shifting the calls down or shifting the entire position to 22,450, so that hasn't actually been or worked in our favor. So overall, so you can say this has been one of the toughest expiry, because generally if the market is in a range or something like that, so we get a good linear decay for 30-40 minutes, so we'll be put back into a comfortable position. But today is one such day where we have absolutely seen no decay at all during the day. So only if you were able to play with delta moves, so you could have captured it. But apart from that, there is hardly any decay seen in the option. And because we were shorting some extra calls, so this up move also hurt us. And currently it feels that, okay, we are totally unable to judge the direction of the market. So currently we have also crossed 22,500, and you can see the M2M has now come to 1%. So the question from here would be, how do we navigate through this position, right? So generally I end up booking at this point, but since I don't have much to lose, I hardly have around 5 more K to lose. But in case if the market comes back, I can gain a lot. So I will let this, or I will risk this 5K and see if something can work out in my favor. Or until and unless, let's say maybe later on, I might get more confident on the range of the market, and that gives me an opportunity to shift my straddles accordingly. Currently, as of now, I will just continue to hold this position because you can clearly see that the direction of the market is becoming quite unclear to me. Okay, so now the market is heading actually towards 22,550. We might also end up breaking the day's high, right? So one thing what I will be doing here is I will create a 22,500 short straddle. As you can see, my loss is around 52K, right? So one advantage what I have from here is I don't see a big upside, or I don't see the day's high to be taken out, right? So you can see that we tried to open around 22,600 and immediately there was a big sell-off, right? So most likely, in my opinion, we might not be taking out 22,600. So what I will do is, from my 22,450 short straddle, I will shift the whole thing towards 22,500 short straddle. But in case if the market is able to come back towards 22,500, so then I will be in a quite favorable position, right? So which means I have a risk to reward of almost 1:6. I am actually giving up say 6 to 8k to get somewhere around 40k. So currently I have lost close to around 50k already, so I might end up losing another 6 to 8k if things don't go in my direction. If they start coming back, then I can easily make 6 to 8 times the risk what I have taken. Okay, at this point the market is slightly coming down, and what I am going to do right over here is start cutting off my call side. So what exactly happens from this is my upside risk is going to come down. So we have a maximum loss of further, let's say 8 or 10k. So that can be reduced to just around 4 or 5k by just cutting down little bit on the call side. So you can see that if the market is going to go up, you can only lose from the call portion of the leg, and you don't lose anything from the put portion. So you are actually going to make money from the put portion. So I will slowly start trimming down my call positions so that in case if the market is going to come back, so I can still make some gain. Even though my gain is going to come down, that should be fine. So okay, now the time is around 3 and you can see that the market is actually coming back. And okay, the market is almost around 22,500 now, right? So what I'm going to do is I'm going to create a complete short straddle, and you can see our M2M also slowly coming down. Currently our M2M has come down all the way to around 35-40k, so from all the way around 55k. So I'm going to keep the short straddle. The thing is, it's already 3 and the short straddle still has around 35-40 points, right? Around 35 points, which in itself is quite high. And let's continue to hold this. In case if things go well, we should be able to come back to less than 0.5%. Okay, so things are working in our favor. So it's been almost around 5 minutes and you can clearly see that the M2M is slowly and steadily coming back. So now we are under 30k. So let's wait and hold and see if we can get to a much favorable position towards the end. Okay, as the time is approaching towards 3:30, so you can see now we have come even below 0.5%. So the overall loss currently is around 22-23k, and I'm going to keep the short straddle. You can also see one more thing. So overall short straddle premiums have now dropped below 15. So we can't or even below 12, right? So we can't risk a lot from this point. So let's see. So we can't risk a lot from this point. So what we are going to do is slowly start keeping a stop loss on the call and put side. So in case if there's a sudden up move or a down move, so we should be out of this position, because from where we were at 2 o'clock to where we are at 3:15, there is a huge difference. So we should appreciate that fact and we should slowly start to cut down, right? So yeah. Okay, so now the premiums, if you take a look at it, so it is hardly around less than 10 points. So what I can do is just, if one leg hits the stop loss, so I'll start keeping a stop loss close by, and if one leg hits the stop loss, I can simply square off the other leg. And yeah, I think the stop loss is hit, and currently we have a loss of under 0.4%, which is around 20k. So I think, yeah, it feels like, okay, maybe I have to push, I can push for further gains. But as I already said, considering where we were some time back to where we are now, it doesn't give me the confidence to do so, right? So maybe today just didn't work for us because market was quite volatile. So generally, So generally what happened today, maybe hitting like a 1% M2M doesn't happen at all usually in this style of trading, because you don't see such random jumps. And one more mistake what I did is knowing that market is volatile, knowing that the market is volatile, knowing that my overall loss is just limited to 0.3% in the beginning itself, there was no need to make aggressive adjustments in the beginning itself. So that was one mistake or small mistake which I did. So I could have taken adjustments a little slowly, and also while the market was coming up, so I could have also collected some credit on the put side. So I could have used that to collect some credit, which I again missed out on. So overall, we could have handled the situation much better, but yeah, so we were definitely lucky. But the last risk what we took was quite a good one actually. A risk to reward of almost 1:7, 1:6. This is a fantastic risk to reward to take. So if you have a potential to gain around 50-60k by giving up just around 10k, so you are in a pretty good position to take that